Your bank is about to make $760,000 off your dream home. And they are counting on one thing: that you never figure that out. Jake just bought his dream home, $600,000, 20% down, 30-year mortgage. His parents are proud. His friends congratulate him. His realtor calls it a smart investment. Sarah was standing right next to him at the closing table, and she made the opposite decision. She rented. 10 years from now, Sarah's net worth will be 60% higher than Jake's. And Jake will have no idea why. Today, we're going to follow both of them, dollar by dollar, through the biggest financial decision most Americans will ever make. Because somewhere between the American dream and your actual bank statement, there's a $700,000 lie. And the people profiting from it, they're counting on one thing: that you never run the math. But before we start, let me show you the single number that changed my entire view of home ownership forever. Renting is throwing money away. You've heard it. Your parents said it, your coworkers say it, your realtor definitely says it. But here's the question nobody asks: compared to what? Because buying a home is not just a payment, it's a leveraged financial bet, often worth over $1 million when you include interest. And most people make that bet based on emotion, not math. So today, we're doing something almost nobody does before signing a mortgage. We're running the actual numbers. And by the end of this video, you may realize something uncomfortable. Buying a house might be the most expensive financial mistake the average American ever makes. But to understand why, we have to look at the number that almost never appears on Zillow. Jake buys a $600,000 house. Interest rate, 6.5%. Mortgage, 30 years. His monthly payment, about $3,800. Seems manageable, until you look at the full number. Over 30 years, Jake doesn't pay $600,000. He pays $1,360,000. More than $760,000 of that is pure interest. That money doesn't build equity, it builds bank profits. And that's just the mortgage. Now add the other costs. Property tax, about $8,000 per year. Maintenance, Federal Reserve data, 1 to 3% of home value, annually. On a $600,000 home, that's up to $18,000 every single year. Roof replacements, plumbing failures, electrical problems, the surprise you never budgeted for. In year 3, Jake's furnace dies. $12,000. Gone. Sarah? She sent one text to her landlord. But the real difference between Jake and Sarah doesn't show up in expenses. It shows up in what happens to the money they don't spend. Sarah rents a similar apartment, $3,200 per month. Jake's mortgage payment alone, $4,500. That's a $1,300 difference every month. Sarah does something simple with that gap. She invests it every month into an index fund, the S&P 500, historically averaging around 10% annually. Now watch what happens. Over 30 years, $1,300 per month, 10% annual return, $2.4 million, just from the difference. Meanwhile, Jake's house appreciates. Case-Shiller index data, U.S. housing grows around 4 to 5% per year. Jake's $600,000 home becomes roughly $1,200,000. Sounds incredible. Until you subtract $760,000 in interest, $500,000 plus in maintenance, taxes, repairs. Selling fees of 6 to 10% on $1.2 million? That's another $120,000 gone at the closing table. Jake's actual profit? Much smaller than anyone at the dinner table wants to admit. Sarah? She has $2,400,000 in liquid investments she can access tomorrow. But this assumes something very optimistic, that the housing market behaves perfectly. History says it often doesn't. Austin, Texas, 2020 to 2022. Home prices explode. Everyone rushes to buy. Then, prices fall 20% almost overnight. Thousands of buyers become underwater, meaning they owe the bank more than the house is worth. They cannot sell. They cannot move. They cannot leave. They are trapped inside their American dream. Meanwhile, renters, they waited or moved. No forms, no fees, no bank permission required. But the most brutal surprise happened somewhere else entirely. Miami, Florida, 2023. Home insurance didn't just increase, it exploded. Some homeowners saw premiums jump from $2,000 per year to $8,000 or more overnight. That single line item destroyed the entire investment thesis for thousands of Florida homeowners. They couldn't sell into a falling market. They couldn't afford to stay. They were caught between a bill they couldn't pay and a house they couldn't sell. Renters, they moved 3 blocks away. Problem solved. So why does the myth survive? Follow the money. Realtors earn 5 to 6% commission on a $700,000 home. That's $42,000 per transaction. Every time you buy, every time you sell. Banks collect 30 years of interest payments on Jake's loan alone. More than $760,000. Pure profit from a single customer from a single house. Mortgage lenders pay for the ads you see on every major media platform. Financial influencers get sponsored by real estate apps. Every single player in this system gets paid when you buy. Not one of them gets paid when you quietly build wealth. The myth isn't an accident. It's a business model. In 2023 alone, the top 5 U.S. mortgage lenders generated over $80 billion in revenue, built on interest payments, built on the belief that renting is failure, built on you. Now, is buying always wrong? No. Homeownership makes real sense when you stay in the same city for 10 years or more. You buy significantly below market value. You have complete income stability. Or, and this is genuinely valid, you want the psychological security of owning your space, of painting your walls whatever color you want, of knowing nobody can ask you to leave. That's real. That matters. A home is not just a spreadsheet. But here's what has to change. Stop calling it a superior investment. Call it what it is, a lifestyle choice with a real financial cost. And know that cost before you sign. Jake and Sarah started in the same place. Same income, same city, same moment in time. Jake followed the dream. Sarah followed the math. 30 years later, Jake owns a house. Sarah owns options. In 2025, options are worth more than square footage. Neither of them was wrong about what they wanted, but only one of them knew what they were actually buying. The bank loves your mortgage. The question is, do you? Now you know what the closing table doesn't show you. But here's what's coming next. We're going inside the banking system itself, the internal profit margins, the actual numbers behind a 30-year mortgage. what a single home loan really earns a bank over its lifetime. When you see those numbers, you'll understand why they make it so easy to say yes. See you there.